Hello, everybody. I'm J Pinkert. Hope everyone's doing okay. How are you? Adinda, Mauricio, thank you for facilitating this pre-holiday webinar that we could entitle Sell in May and Go Away, but Stay Tuned in June. Start off with the daily and the S&Ps. Hello, Lopez. How are you? Can everyone see the S&Ps here? Give me a Y if you can. The chart clear. So here was May, a very negative May for risk on, reflected in the S&Ps, their weakness, the strength of the dollar, the weakness in commodities, the strength in the bond market, the strength of the dollar. So everyone who sold in May and got short or got out, well done. The other part of the expression, though, is sell in May and what? What's the end of the expression? Go away? Well, what if this was just a correction in an ongoing bull market, and it was right to sell in May, but it was right to recommit and get long risk for a summer rally? That is a possibility. With all the carnage we've had and the strength in the dollar and the news out of Europe, I'm not proclaiming a new bull market, but we are higher on the week in the S&P. The low was set on Monday, so although the dollar continues to make new highs, the S&Ps are resisting that. I will say, though, that if we take out this week's lows, that there's a big problem in this market, and that's probably how you could see 120 euro in a hurry. Here's your weekly. So as you can see, we have a reversal week here under these lows. Unless they just take the lows out in a hurry and reverse it, you would have to think that there's some big problems, that the 1200 level would be within sight, possibly 1150. So if the bulls are going to make a stand in equities, they're going to make a stand here. Who was at the webinar last week when we talked about the potential of a bond market top? Anyone remember that? And we were talking about the U.S. dollar yen potentially being a good long-term buy because of a potential high in the bond market. We did make new highs for this rally, and we're lower on the week in the bonds. And the yen has recovered quite a bit this week. We'll get to that in a minute. I just wanted you to see the weekly. Here's a daily chart. So we've had 2 negative days in the bonds. Doesn't make a trend, but it is very possible that they're rolling over, which plays into the scenario of being long U.S. dollar yen, which is part of the carry trade in treasuries. And if the yen's going to start heading down, or in our pairing U.S. dollar Japanese yen going up, the bond should continue to break. They get back through 120, we could be looking at 116. So I put forward to all hearing my voice that the sell in May and go away was right in the first part to sell in May, which means you bought the bonds. You had a good month in bonds, risk off in May. Now we're heading into June. So perhaps it's going to be right to buy in June and recommit if you sold right in May for the potential of a June, July, August rally in risk, which would mean a decline in bonds and a pretty good rally in U.S. dollar yen that I'm already committed to. Okay, let's take a look at some of the commodity markets that have also been under pressure because of the strong dollar. Here you have the crude oil market. Big break in the month of May as well, from 106 down to a shade below 90. So we've had a $16 drop in crude from this high, and from this high you're talking $22. Why not a bounce back bear market rally during the month of June? And there are some fundamentalists that are saying that this is just corrective and that these highs eventually will come away. But I'm of the mind that we are setting up for at least a bear market rally to get back to the upper 90s and possibly 100. So that would play into the potential of a correction in what pair? What pair is most closely correlated with the crude oil? What pair has been going up lately, along with the market going down and oil going down? That's right, Adam. So Canada's rallied almost 500 pips off the low. If I'm right about a rebound here in crude, perhaps we get a 50% pullback in this 500 pip rally that we had in Canada. And again, we'll get to that chart. I'm short that, currently underwater on a position. Let's take a look at the copper market, which is known as the metal with a PhD in economics. And we were talking 330, 340 copper when it was trading up in here. This formation measured that. We're there. Nice little turn today. I would not be short copper. Maybe on a rally back to 365, 370. We're due for at least reflex rallies in S&Ps, a pullback in bonds, a bounce in copper, bounce in crude, and yes, I think even a bounce in the precious metals may be coming. Very possible that gold has bottomed for a bear market rally, at least minimum from here. Didn't act too good today, tried to give it back, but we're posting higher lows right now. We get back through 1580, it looks good for a move back to the base. So my overall sense of the markets is I'm not proclaiming a new bull market in risk, but I'm saying it feels late to me to be buying bonds, to be shorting the S&Ps, to be shorting crude, to be shorting copper, to be shorting gold. Give me a why if you understand that. And now let's take a look at the dollar index. And because of that, even though people are talking about much higher levels in the dollar, it feels late for me to be long the dollar. So nothing wrong yet. Almost looks like there's some acceleration coming here. I'd be interested on a pullback here at 80.50, but I would not chase the dollar. In fact, there are, if I pull up some shorter term targets, there are some divergences developing on the 60-minute. So today's just going to be kind of a forecasting, looking ahead session. See how we're diverging here? We've been diverging for quite some time. So the potential of correcting this move from 78.80 to up here, I think, is possible back towards 80.50. And that's my take on the outside markets. Any questions? In Canada, we've had this 500 pip rally to almost 103. From the lows again, this was a buy in May and maybe go away. So we've had this type of rally here in Canada. Can it continue to push up a bit more? Yes. But do I chase a market like this? No. And there are some warning signs on the 1 hour chart. We have some pretty good divergences here. We will again at new highs. And on the 4 hour time frame, here was your momentum peak. And here we are diverging, pretty glaring divergence up here. We took out the other day's highs by a pip here. Can it push up again? Yes, but I'm much more interested in buying a pullback. I'm currently short looking for a counter trend trade back down to support. That's my take on Canada. Pound, if you remember, we were talking about the pound up here and saying that, they've cleaned out all the stops, all the shorts have been taken out with this rally that we had and this rally that we had. I guess the last stop would be down against this return line. But now when I look at the pound, I go, you know what? There are a lot of people real bullish the dollar. There's probably buy stops here, buy stops here, buy stops here. Maybe they even have enough juice to go for these. So if I'm bearish a pound, I'm looking for a rally to sell. And counter trend looks interesting to me here as well. So I'm looking for counter trend moves in the dollar, including the pound. Of course, the euro has been the weak sister. But when you look at 1 hour charts, you have one drive, two drives, maybe one more, but we're diverging on the 1 hour. We're diverging on the 4 hour. Even at new lows, we're way above 30. So when you look at the daily, you go, well, it's taking out the 126 support. But I've seen many markets that will take out an important support level and then reverse. So everyone who was bullish the euro threw in the towel under 126.20, and so far it was right for them to do it, but it's only 85 pips under this low. So your first sign that euro might be starting to do something right would be to start trading back above this prior low. But I see some divergences in these time frames that tell me not to be short euro at the minimum, and also to be looking for counter trend moves. One of the reasons is EG. Although euro's made some successive new lows, EG is still well above the lows it put in a week ago and has the potential to put in a higher low should they turn the euro. That EG could possibly bottom here and then give us another C wave back to the upside. So that's another reason. We have the divergences, and all the way down in euro up until recently this week, every time the euro made a new low, EG made a new low. Give me a Y if you see that that's not happening this time and that there might be a message about that. And what is the message? Anyone want to hazard a guess here? Okay, the message is that for the first time, we're getting a non-confirmation in EG with euro making new lows. So at the minimum, that tells you, you know what, maybe I shouldn't be pressing the short side of euro at this time. Okay, moving over to yen. We talked about the yen putting in a higher low. I was talking about the 34 level. We got through it. 79.12 was 61.8 back, and we took it out by about 20 pips. Then we had the Fitch downgrade. That's what this rally was in the yen. And we pulled back, and so far we have a higher low here. If we could start getting through the 90 level, I think we have something significant happening here. And back over 80.90, we could be on our way back to new highs. So this too is contingent upon the S&P's holding, at least continuing to retrace and getting a retracement rally in risk, which means bonds would continue their descent, and we'll get some type of at least fib retracement of this decline in US dollar yen. The commodity currencies, Aussie and Kiwi, have been the poster child for risk off. There's your Kiwi daily. If you notice that these recent lows in Kiwi were diverging, not saying they can't try and take it down again. I wouldn't be pressing it. I'd be looking for some type of retrace. I mean, we've had one heck of a decline, let alone from here, the 84 level, but even from here, 83. So for there to be some type of vicious bear market rally in Kiwi, why can't we see 78 again? Okay, same story in Aussie. Definitely has been taken out to the woodshed, but why not 101 again? So again, looking for counter trend moves in Aussie and the Kiwi. And lastly, Swiss. It's interesting what we've done here in the Swiss with this rally. Till I'm short this underwater about, 45 pips. We've taken out last December's highs right here by a pip or two. So it's going to be pretty interesting to see what happens here, because on your 4-hour time frame, you have pretty glaring divergence here. Okay? And you do as well on the 1 hour. Maybe we have the third drive to complete it up here. But again, I'm looking for counter trend action, and we've had one heck of a rally from here or from here. So for Swiss to pull back to 92-ish, maybe even all the way back into the gap is possible. And that would mean the euro maybe has 130 in it or better. Any questions on anything I've covered? Let's just go back and review quickly. My take is that there's going to be counter trend moves. Which means in Canada, I'd be looking for some correction of this 500 pip advance. You get your fibs out, use your moving averages. Pound, we're looking for some type of at least bear market rally, possibly back to 59, maybe 61, which would be a pretty good retracement. Same type of setup in euro. Perhaps we get back towards 127, 130-ish. Starting to diverge here. Japanese yen, we're looking for a rally in the yen. As risk comes back into the market, it's going to pressure the bonds and should get some type of pop in the yen. Euro GBP could be a buy and be putting in a higher low, and if that's the case, that would confirm that there's a rally coming here in euro. The commodity currencies which have been taken to the woodshed look due for some type of retrace, with Kiwi led the way down. Perhaps it leads a correction, and looking for some type of topping action here in the Swiss, and at least some type of correction of this recent advance that we've had during the month of May. And that's a wrap for me. Give me a Y if you have some ideas that you didn't have 20 minutes ago. I'll open it up for questions then. Any questions? Okay. Solby, yeah. What kind of pattern is this? Perhaps one more low? Perhaps one more low would be interesting for a potential buy here. Well, I hope everyone we have a holiday here in the States on Monday. I hope everyone has a good weekend and a very good June. And, you know, be open to the fact that what everyone's thinking may not be the way the markets work out here. And we know that there's an awful lot of pessimism regarding euro, and I can't argue the action is crummy. But I think you don't want to be continuing to press the short side of something after we've had this type of massive move. You're welcome, CS. Okay, everybody. I turned 59 Sunday. Thank you. Okay, see you next week. Thank you, Solby. Adios. Adios, everybody. Thank you very much, FX Trade. I will. Okay, everyone. Bye-bye.